Hi there, I'm Brendan from Velocity Financial. Welcome to the third instalment on ways to pay your mortgage back quickly, ways to pay your mortgage off quickly. Just to remind you, the first way we looked at was using a revolving credit account to do that. The second way was to make lump sums into your fixed mortgage, and this is the third option you have available to you. And basically, any other option is a variation of one of these three. So let's say this is your 30-year loan, looks something like that, and you're paying regular payments off over the life of the loan. So the third way is to make increased payments over the minimum. Okay, so if you are paying slightly higher each time period, your mortgage will look something like that. So just to put some figures around this, let's say this was a $350,000 loan. Your regular payments on that at a standard interest rate would be around $2,000 a month. Another $75 a week will move it to a 22-year loan, and the savings over the life of the loan will be around $125,000. So the moral of the story is a little bit extra each time period can make a big difference on the length of the loan and the amount of interest you're going to pay back. The advantages of it is you can just set this and forget it at most banks. So instead of paying the minimum, you can just pay the minimum plus a little bit, and then you can put that away each period and get on with your life without having to think about it too much. Another time this is really key is if interest rates drop. If you keep paying what you were paying before the interest rates dropped, then in effect you're paying over the minimum, and you will have an effect in terms of reducing the length of the loan. So that's generally a really smart thing to do. The one disadvantage of this method is obviously once you've paid that extra off into your mortgage, if you need to get it out again for some reason, then the bank reserves the right to say, no, you can't have it back. Now, often they would give it to you back and increase your mortgage again, but if your circumstances have changed, they may not. So just be aware of that, if you're putting every dollar into your mortgage of extra money, then there may be a risk if your circumstances change. Things might be tough and you might find yourself in some difficulties. So you just do need to watch that. But that aside, for lots of people, this can be a really smart thing to do in terms of reducing the length of your mortgage. I hope you found that helpful. Obviously refer back to the other two videos, which will give you some detail around those models as well. So thanks for listening.